Welcome to this episode of Personal Finance Podcast. In these podcast series, we always focus more on investor management rather than investment management. Our aim is to try and understand our investment behavior, our biases, what we can control, and what we need to learn beyond the daily news and headlines that we are exposed to 24/7. So, what is today's story? The news. Everything on TV channels and newspaper is in red nowadays. Headlines are screaming the return of the wolf of Wall Street, fear stalks Dalal Street, markets get spooky, investors cautious expecting wild swings, and low faith in the upside breakout. You might be worried right now. The news is full of noise again. Trump tariffs, market reactions, sharp corrections in the stock market, red all over your screen. And suddenly the question creeps in. Is something really wrong? Should I be doing something? Should I move to cash? Is this the beginning of something worse? How long will it last? Maybe you spoke amongst your friends. Maybe a colleague gave you some advice. Maybe your relative or your CA told you to be cautious and salvage whatever money you've invested before it goes further south. And you're confused. It's okay. It's human. We all felt that twist in our stomach when the markets fell quickly. Here's what I want to tell you. This is not the beginning of the end. It's just a perfectly normal temporary decline. Yes, the headlines are dramatic. Yes, your portfolio might be down by quite a bit. Yes, it feels uncomfortable. But no, this is not new. This is not unusual. You know, corrections are a part of the market. Not bugs, not exceptions. They are features. See, the stock market is predictable because it will never go up in a straight line. It rises. It falls. It moves sideways, but it never moves in one direction forever. That's its nature. Markets breathe just like we do. They expand and contract. They grow and correct. They move in cycles. So let's just zoom in. You see days which are up. You see days which are down. You see good quarters. You see bad quarters. Strong years and weak years. But once you zoom out and you look in the long term, the trajectory is up. It always has been. Every single dip, drop, or crash you've seen in your lifetime, the markets have always recovered. Economies have grown, companies have innovated, and we have moved forward. Have we forgotten the COVID period? That was probably the most uncertain period, more than anything that we have seen till now, even today. The markets reacted, didn't they? Yes, they did. They dropped almost 40%, the sharpest and the fastest decline in the Indian stock market's history. And then, what happened? Today you see that they have just zoomed ahead. While we were in the middle of COVID, just in few months, the markets went up again. No one expected it. After reaching its low of 7,500 in March 2020, the Nifty 50 began a robust recovery. It reclaimed its pre-COVID high in November 2020 itself, just in a matter of 7 to 8 months. And following this, it continued its upward trajectory, achieving an all-time high of 22,000 in March 2024. Yes, in just 4 years, there was a remarkable gain of about 200% from March 2020 low. So this time it's no different. Now think forward to 2030. Where do you think the markets will be then? How about 2040 or 2047? Will it be lower than today? Higher than today? My money is on higher, way higher, and I believe yours will be too. Yes, tariffs can shake things up in the short term. Yes, headlines will get more dramatic. Yes, the politicians will do what politicians do. But markets adapt, businesses adjust, innovation continues, and if you stay the course, your portfolio rides through it all. But do you know what actually causes long-term damage? It's not tariffs, it's not volatility, it's not market corrections. It's your reaction to these things. It's the urge to sell when everything looks red. It's the panic, it's the emotion that makes you think you need to do something, but the truth is, you don't. You don't need to make a move. You don't need to act. You just need to trust the process. You need to stay invested. You need to remember why you invested in the first place. Of course, that's if while investing in the market, you had a strategy in place. In line with your goals, what you want your money to do for you. What goals are you planning for? When will you need the money? You need to allocate your assets in a way that balances growth with safety. And you need to have a reserve of cash, something to fall back on when things get rough. You didn't invest to avoid volatility. You invested to build wealth. You invested to secure your future. That goal hasn't changed. And more importantly, that time horizon for you hasn't changed. Unless your financial goals have suddenly changed in a week, unless you suddenly need your entire portfolio tomorrow, then there's nothing to worry about if that's not the case. This market correction isn't a threat. It's simply a part of the journey. Let me ask you something. When you see flights getting delayed due to turbulence, do you swear off flying? When the plane shakes midair, do you assume it's crashing? Or do you tighten your seatbelt, breathe a little deeper, and wait for the skies to clear? Because that's exactly what seasoned investors do. They don't jump off the plane during turbulence. This is no different. What's happening now in the market is turbulence. It may continue for a few days, maybe even a few weeks or months. But the plane is still headed where it's supposed to go. And the passengers who stay in their seats, those are the ones to arrive. So here's my message to you, dear investor. Don't be shaken by the short term. Don't confuse these headlines and sentiments of the market with long-term reality. Just like any other time, this too shall pass. And when it does, you'll be glad you stayed calm. So just breathe. You're doing just fine. I hope this helps you. I hope this perspective is different from what you've heard till now. God bless. Take care.